Welcome to the episode 7 of the Not-for-Profit Accounting. So again, we're already finished with all of this. Imagine? So for this episode, let's talk about the conditional pledges and the donated services. But before we do that, if you are new to this channel, I encourage you to look at the description below because the links of the previous episodes are found there. Now, let's start the video. In the last video, we talked about the unconditional pledges. Actually, it's already finished, but we still need to know the effects of what we've talked about in the last episode 6. 6, right? 6, yeah, 6. Anyways, we need to know the effects of the unconditional promises to donate on this accounting equation for not-for-profit organizations. Okay, so if the NPO receives such a promise from a donor, the assets will increase, right? But only in the form of donations receivable or pledges receivable. There's no cash, there's no non-cash asset yet because the NPO did not receive those yet. And of course, the net assets restricted will also increase, right? Again, it's in the restricted and not here because the donation has not yet been received, right? But the amount here should be at present value. So if the donation is to be made only after a couple of years, then you need to use discounting to get the present value. Another is that if there are doubtful pledges, like in this example has been taken from the example in the last episode, number 6. So the doubtful pledges is 200,000 as if. So what will happen first is that the restricted net assets will be deducted by 200,000 and will be transferred to unrestricted net assets. Because you will need that later because later you are to record doubtful pledges expenses. And you need to deduct the expenses from here. Because again, expenses can only be deducted from the unrestricted net assets. So, if this here is deducted, the assets will also be deducted in the form of allowance for doubtful pledges. So again, there are two sets of effects if there are doubtful pledges. First is the transfer from the restricted to the unrestricted net assets, and then the recording of an expense, which is a deduction here and a deduction from the assets also. Now let's go to conditional pledges or conditional promise to donate. By the way, again, a condition is an event that may or may not happen. So if a donor promises to donate but there is a condition attached, the moment that the condition is not fulfilled, then the NPO will not receive the donation promised. But the question is, what will the NPO do if it has received such a promise? So let's have an example right here. So we have Mr. Baby promised to donate 2 million to Bantay Baby Foundation if the NPO gets another 2 million from other donors on or before the end of December. So this is the condition. So if the NPO cannot get another 2 million donation from other donors on or before December 31, Mr. Baby will not be bound to donate. So again, what will the Bantay Baby do? Answer: no entry, unless these two are present. Number 1, if the condition is substantially met. For example, still related to this, the Bantay Baby Foundation received 1.5 million donation from other donors. So if that's the case, then this has already been met. And number 2, the happening of the condition must be reasonably certain. Well guys, if the problem is silent as to this number 2, you need to assume that this has already been met. However, sometimes, a problem will tell you that even if the condition has been substantially met, the 100% happening of the condition is impossible. Like in this example situation. What if on December 31, 11:59 p.m., so this is exaggerated to make my point, Bantay Baby only collected 1.9 million from the other donors. So it has been substantially met. But it's impossible that the number 2 requirement will be met because it's only 1 minute until the deadline. So I'll repeat it again. We can say that this first requirement has been met because the condition has been substantially met. because 1.9 million has been collected out of the 2 million based on the condition here. But the fulfillment of the 100% condition is already impossible. Remember, it's already 11:59 p.m. of December 31 and only 1 minute until the deadline passes. So there will be no entry for this case that I've mentioned. But then again, if there are no information related to this number 2, like if what was mentioned in the problem is that the NPO received 1.9 million from other donors and nothing else, then we should assume that the happening of the condition is reasonably assured. So, what if these two are met? Then, debit donations receivable, credit contributions revenue restricted, 2 million, based on this sample problem. So this entry is the same with the entry on unconditional promises to donate, if you can still remember. So that's it. But there is a twist. Don't worry, there is only one twist, and that is, what if the donor already made his donation with a condition, but such condition has not yet been substantially fulfilled? Here's the sample problem again. Same with the problem below this one, except that the donor gave 2 million in advance before the condition is substantially met. Will Bantay Baby make an entry? Yes, of course. But the entry is debit cash 2 million, and then credit will be a liability instead of contributions revenue account. So that's it for conditional pledges. But before we end this topic, let's take a look at how this affects the accounting equation for NPO. Okay? Again, if the situation is just like this one, there will be no entry. But if these two are met, then assets will increase, and the net assets restricted will also increase. And if the donation is given before these two happens, the entry will result to increase in assets still. But instead of net assets, the credit goes to liabilities, or the increase goes to the liabilities. So that's it. And we are already finished with conditional pledges. And now let's talk about donated services. And let's go directly to the example. Mr. Baby provided some services for Bantay Baby Foundation worth 200,000. However, Mr. Baby said that those services were made for free and that the supposed to be payment shall be used by the NPO for its noble cause. Question: will Bantay Baby Foundation make an entry? Yes. And the entry is debit expenses, credit contributions, revenue, unrestricted, 200,000. And sometimes, the debit is an asset if the services donated created an asset or if the services are capitalizable to a particular asset. But wait, this is weird, right? Debit expense and then credit revenue. It's odd, but it is what it is. This is the only instance I know where debit expense and credit revenue entry exists. So that's the entry. However, this entry will only be made if the services donated pass the two requirements. What are those? First, we have, is the service professional in nature, like for example, lawyers or CPA services? Or even if not professional in nature, did the services enhanced or created an asset? Like for example, repair services for an equipment needed by the NPO. If yes, or in the longer version, if the services is professional, or if the services created or enhanced a particular asset, then it passed this first requirement. However, this is not the only requirement. There is a second requirement, which is NPO would otherwise have to purchase the service. In simple terms, the service should be needed by the NPO that it needs to purchase it. Because if not, even if the services are considered professional, or the services creates or enhances an asset, there will be no entry. Okay? But to make it clear, we have an example right here. We have a professional singer who bills 50,000 a day, volunteered to sing for the yearly fundraising event of an NPO. The NPO do not really hire singers in this yearly event, and it was not in the plan to hire singers for the current year's event. So, the services donated passed the first requirement, but it failed here in the second requirement. So again, to have an entry like this, the service should be a professional one, or if not, the service should create or enhance an asset. And lastly, the service should be needed by the NPO, that it needs to purchase it. So that's it for the accounting for donations. Next, we will have financial statements of an NPO. But wait, there's more. Actually, I wanted to test if you really understood the topic. So I have here an assignment. So these are the services given to the NPO. You need to classify them as recordable or not based on the criteria that I have given you a while ago. So if it is to be recorded, then select this Y, and if it's not, then select N. The answers will be given in the next episode. So that's it for this video. If you learned, please click like, subscribe, and turn on the notification bell and select all to be updated on my next videos. And what do you think of this episode? You can let me know in the comment section below. And see you on the next one.